QuickBooks Pro Desktop 2021. Bank reconciliation after having constructed the financial statements with the help and use of bank feeds. This will be the first bank reconciliation. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. We are in our bank feed test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We've constructed our financial statements with the use of the bank feeds. Now we're going to take a look at the bank reconciliation for the first month of operations. Now note, you might be thinking, you might hear that if you do bank feeds, then you don't need to do a bank reconciliation or something like that. Note that that's not really the case. You still want to do the bank reconciliation, but the bank reconciliation could have a different impact or a different usage depending on how you are using the bank feeds. So in other words, if you're using the bank feeds in order to supplement your full process bookkeeping system, in other words, if you're using accrual processes such as invoices and then receive the payment, recording the deposit, and then using the bank feeds to match your side to the books, then the bank feeds are basically kind of doing the reconciliating process, helping you to reconcile, but you will still have a reconciliation difference due to the fact that you will have differences in the point in time when you recorded the receipt of payment and the point in time it cleared the bank. It's the same with the check side of things. If you're recording the checks when you enter them into the system, then using bank feeds to match, then you're using a full accounting system. You will still have outstanding checks. You'll still need to reconcile, although the bank feeds can help you with the reconciliating process, but you will still have a difference between your balance and the book balance. However, if you construct your books entirely from the bank statement, which is what we're basically going to assume at this point in time, then you're not doing this whole process. You're kind of just waiting till the thing clears the bank, whether it be a deposit or a check. And at that point, you're constructing your books actually from the bank feeds. You're not doing the full service accounting system double checking to the bank, but rather we are actually reliant on the bank in order to use that data to construct our financial statements. We still want to do a bank reconciliation process, but it won't be determining outstanding checks and deposits. It will be determining or helping us determine that we have not double entered anything, deleted anything, or something didn't get input, something like that. So we still want to check it on a periodic basis. Let's start by opening up our reports. Reports drop down, company and financial. Take a look at the balance sheet standard. We're going to change the dates up top in the custom reports from 01/01/20 to 12/31/20. And I'm going to run that report. Now, if I look in the banking account, I'm going to go into the bank account. The month we started doing this is the month of May. And notice this little lightning bolt or whatever it is not actually a check mark saying that something has cleared the bank. That's basically saying, hey, you matched this up or created it from the bank feeds. So that's kind of like a clearing type of statement, but it's not actually clearing the bank statement, which will give us a full check, like an actual check mark when it clears the bank statement. So we want to do that because that tells us what time we're matching the timing out in that way to the bank reconciliation. Now, we had this little icon for all these up top as well, but I went in and kind of messed with the bank reconciliation to set it up for our practice here. And so this thing went away. And so notice this thing is not like a permanent, it goes away a lot easier than an actual check mark saying that you reconciled the process. So bottom line is this can help you to determine that you have gone through the process of reconciling items, but they're not actually reconciled until you do the bank reconciliation, the bank reconciliation process. And the actual bank reconciliation is the report, which should be fairly plain if you got all your information from the bank, meaning our ending balance you would think would match this number right here. Now, it doesn't at this point in time because this is the end of everything we have through May, because in the first bank rec, we're going to have a beginning balance issue as well. So if we do our reconciliation process, we're comparing our books to the bank statement, which might look something like this. This is a mock bank statement. And we have the summary up top, beginning balance, additions, subtractions, and then the ending balance. What we have gotten when we did the bank feeds is all the detailed information. All this stuff we actually got directly from the bank. So it has to tie out because it's coming from the same source. It's got to be the exact same numbers if we constructed our entire books from the bank feeds that came from the bank, which are also the things that are constructing this information down here. What we did not have in the first month, however, is the beginning balance. That beginning balance wasn't there So we're going to have to enter the beginning balance into the system. You'll see right now we should only have the activity minus the 663.58. That gives us the 1247.23. That's the 1247.23 here. Okay, so let's go through our bank reconciliation process. It should be really easy if we constructed our books directly from the bank. We should be able to just check this thing off. Easy process. So I'm going to go to the banking dropdown. We're going to go to reconcile, and I want to pick the checking account. We're going to pick the checking account. Now we have this beginning balance issue. I didn't enter the beginning balance. You can go back in and try to enter it, but what I'm going to do instead is just add it as part of the data. So we can, it's just one other item you're going to check off, meaning I can check off this beginning balance as being part of the bank reconciliation process, as it being in the beginning balance, or I'll just check it off as like it's down here and included in one of the deposits. It's the same kind of effect in terms of at least reconciling the reconciliation process. So that's one way we can deal with it. We will see that as we go. So I'm going to put the ending balance here, which is the 23,000. So we have the 23,000. That looks good as of 5/31/20. I'm not going to do anything for the service charges or interest. If I do have things related to that, it should have come in from the bank feeds already, so it should be taken care of. So I'm going to say continue and okay. Now I want to hide anything that's after May, because if anything's in our books after May, it wouldn't have cleared the bank even if we were using a full service bookkeeping system, because it's going to clear the bank after we enter it in our system. So I'm going to say hide everything after that date. And then you can usually, this is your reconciliation. This is the ending item here. Usually you could just mark off the entire thing at this point if you constructed your books directly from the bank, because there are no outstanding items, right? Because we got our stuff right from the bank. So if we have the same dates, there's no timing difference involved, because we didn't enter the checks that had to then later clear the bank, which is what normally would happen in a full service bookkeeping system. We waited till everything cleared the bank, then recorded it at the same date that it cleared the bank. And therefore, there's no difference here. Now we're showing a difference in this reconciliation, the 21,752.77, because that's the beginning balance. So now we'd have to go deal with that beginning balance on the first bank reconciliation only, then we'd be okay going forward. Now, if something did not tie out, then there's not, you don't worry about it. You just say, okay, let me just check this thing off, the traditional way to check it all off. And if you do have some items that you are using a full service bookkeeping, meaning you wrote a check and you wrote checks, for example, and you have them in your system, and they maybe didn't clear the bank yet, and you would then have to find those items by doing the actual bank reconciliation process, which is to go from the bank statement and then back to the book. So I'd say there's the 390, the 63, the 75. So here's, and I need pennies here. I don't have pennies. Let me add pennies to this. So it should be exact. We should be exact. 390, 11, 44, 75. So I'm going to say there it is, 390, 11, 75, 50, 25, 50, 30, 29. So that's going to be 50, 25, 50, 29. Looks good. So check those off. Got those. And then on the other side, of course, we've got, and notice if you get it directly from the bank, the dates will line up. If you wrote checks and you didn't tie them out to the banks, then the bank statement will always have dates later than what you have them in the books for. So the dates, and that's what the timing difference could be. There's a check that we have in the books that didn't clear the bank till after the cutoff, in this case, May 30th. But here we have the same dates, so 48, 20, 24. Notice on the checks, you might have check numbers and whatnot, and possibly payees if they're electronic transfers. On the deposits, you might have stuff in the memo information that can help you out, but you might not have as much detailed information. But the deposits should be, usually there's less deposits in there, so it should be fairly easy to tie out just the deposits, and they're pretty close by date usually, because it doesn't take a long time once you make a deposit for it to clear the bank, unlike when you send someone a check, which could take quite some time. So then you'd go through and check these off. So there's the 48, the 106, and so on. And then there's the 40, the 6, the 3. So there's the 40, 6 cents, the 3. And you want this thing to be exact. If it's not exact, your verification goes down greatly. So I'm just going to check them all off. So got them. We've got them all. There they are. So now we're off by this 21,752.77. That's the beginning balance, because when we did the first bank feed, we only downloaded the activity. We downloaded the activity and we had this beginning balance that we're now going to have to enter into the system. So I'm just going to manually enter it into the system now. Now notice I started in May here. You wouldn't, if you have a calendar year end, then you don't really want to start in May. Typically you'd like to start in January, so you have a full year if you're doing it for taxes, for example, in the same time period. If you have a seasonal year end and your year starts in May, then maybe this is perfect, right? And then you want to enter any beginning balance. You could say if you had prior bookkeeping done in the prior period, then you want to make sure that it's done in the prior accounting system. Whatever's in the current accounting system has to be starting as of the cutoff date, in this case, May 31st. So I'm going to enter the beginning balance as of before May. It's going to go into the equity section or roll into the equity section if it was to go anywhere else, so it'll be part of basically equity at that point in time. So I'm going to go, okay, let's go back to my lists drop down. I'm going to go to the chart of accounts. Let's go into our checking account, and I'll put it in there as of 12/31/19, which is last year. Just so if you had a calendar year in, you started in January, I would put this in just to double check in the prior year, even though I'm still going to put it to equity, so it shouldn't matter in either case. I'm going to make it a deposit. I'm going to say 21,752.77, 21,752.77, and then the other account I'm going to go to is going to be the equity account. It's not going to go to an income statement account. It's going to go into equity. So it's going into equity. Even if it was going to an income statement account, because it's in the prior year, it would then roll into equity, and we should be good. This is going to be the beginning balance for cash. So I'm going to say record, yes, and that's okay. And so there we have that, closing this back out. Then I go to the reconciliation and I say I have that one more item, check it off. That puts us in balance, ending balance now at the 23,000. That should now match if I go to my chart of accounts. Not my chart of accounts. If I go to my transaction detail for cash now, let's just see where this is. This is on the balance sheet. And if I double click on cash transaction detail, I'm looking at May. Now I have 23,000 as of the end of May. So it ties out exactly because we got our data directly from the bank statement, and now we added the beginning balance to put in the final puzzle piece to be back in balance. So then we can simply reconcile it. Now notice this is the process of reconciling. Then we hit this is still reconciling, and then the bank reconciliation is going to be the reports. The reports generated, you probably want to save them just to make sure that you have them, but they're going to be pretty bland right now, or pretty plain, because we don't have any reconciling items, meaning our bank statement now matches our books now in the reconciliation perfectly. In the transaction detail, it matches perfectly because we made our books directly from the bank statement in this case. So if I look at the summary, usually you want a reconciliation of what's different on the books to the bank, which is usually outstanding checks and deposits. There are nothing different right now, so I just have the cleared transactions is the same as the register balance. And this stuff up top is just telling me the items that clear. This is basically the bank statement. These are the new transactions after the date, which isn't really necessary in a bank reconciliation. So all this is telling me is like, hey, look, it ties out exactly, meaning if you constructed your books from the bank, then you haven't double recorded anything. That's good. And you haven't deleted anything. Nothing is missing. That's good. You tie out exactly. So everything looks good there. Again, if you were doing a full service bookkeeping process, you enter in the books, we enter the books on our side, such as we enter the checks when we write them, the deposits when we deposit them, and then match them to the bank instead of creating our books from the bank feeds. Then we would have a difference, those being the timing difference of outstanding checks and deposits. So this is still important, but it doesn't serve the same purpose as a bank rec would under conditions where we're recording the books separate from the bank. This is serving the purpose of us recording the books directly from the bank. So then I'm going to close this back out, and then we've got the reconciliation for The full reconciliation, again, there's no more detail really that has here because there's no reconciling item. So usually you really want the detailed reconciliation, so it tells you more detail about the reconciling items, meaning the outstanding checks and deposits. There are none here, so this isn't really giving you much more detail. It's telling you what cleared the bank, which is basically on the bank statement, and then it tells you the new transactions that happened down below, which isn't really relevant for the bank statement as of 5/30 or the time of the bank reconciliation. So that's going to be the full process. Now, in the following month, then it's going to be even easier to reconcile, because in the following month, you shouldn't have any beginning balance issues, and all you got to do is go into the reconciliation, probably check the whole thing off, because you've already built everything, as you can see here, from the bank feeds, meaning it's built from, in essence, the activity on the bank reconciliation, and the beginning balance is already in place. Therefore, you should just be able to click a button to make sure to reconcile, but you want to make sure to click that button, because that button allows you to make sure that, once again, you haven't duplicated any transactions and you're not missing any transactions.